Welcome traders to this week's Simple Market Metrics review. So we're going to do something a little different today and adding something in and taking something away. So for NQ, I was trying to go back with market replay for the past couple months. It only let you go so far. And so this day in particular, on February 6th, we have a trade that I was trying to confirm. TradingView doesn't let you go back that far with the indicator with the plan that I have. So, but 929 candle. So the close of this candle, it said I had it marked at it, and it's 288 ticks on the 1 minute trading. Well, as you can see, if that was a real signal, if we actually got that signal, it barely went up. I mean, it went up against us maybe a point before slamming down easily for the 20 ticks. But I don't know about that one, of why I put that there. And then that video covering that week, I didn't scroll through like looking at it, so I can't go back with video evidence of it. So this is the best I can do on it. So I did a market replay on all the other signals I had recorded. All of them made sense according to the profit waves on it. So that's huge. If we didn't actually even take that trade, if that one didn't even exist, a signal, then at 9:45, you caught the win. So then you got 3 wins for the day. Either way, you caught 3 wins. So 5 ticks by 288. I mean, that's just under $1,500. So that actually makes our number. Let's see, 2, 6. Yeah, that was within both either trading session. So, that's going to bump this up to like 7,000 and this up to around, 4,500. I'll go through this totals again. So I just wanted to show that to you so you see I'm actually on the right day, 1 minute. And I try to have these very similar to what the profit wave is going to look like on their money flow. It's not completely identical. And then just the bars, they don't have this special code in them to show, even if it's nut bar, it shows it as red, according to the indicator. So looking at the past 2 weeks to continue on. So week of March 3rd was a bad week, minus 1,230, 7-2, took 2 big losses on that one. And then the most recent week, March 10th, plus 1,200, 6-0, so a strong one. So all of these totals reflect that. So over 5,500 for the full session and 3,025 for the 1 hour session. It's all, and then on the next video, I'll have the numbers updated, reflect that other 288 tick loss that didn't seem to actually happen. So, and so I'll show you, here's what I did. So one of the reasons why I went to the market replay is to show if you had a hard stop of 120 ticks on the 2 minute and 60 ticks on the 1 minute, and how those results would actually pan out. And you would still close it out for a loss if it went against the profit wave. So you necessarily didn't hold to max loss if you didn't hit the profit target. So the full session in January, 26-13, 7 of them did hit a max loss, and one of those out of the 7, if you didn't have that hard stop so close and gave it room, it actually did go back and hit the profit target on there. And so 6 trades did not hit max loss. So then your average loss is less than 120 ticks. And then for just the 9-10, 17-7, you got 6 max loss. And, again, I think it's the same one. Yeah, it hit. So if you see, the numbers are pretty comparable for that month. If you had the hard stop, if you didn't, but without, with having the hard stop, you should have probably a lower volatility on the portfolio because you're not taking these huge losses that can come. But look at February, completely different. So the full trading session, 26 to 12. And that the wins to losses are based on the hard stop. It is not based on not having the hard stop. So 8 max loss, see 5 of them on both sessions would have actually hit your take profit if you gave it more room to breathe, and just use the profit wave if it closed against you. So, you had a losing month, back to back losing months, but you would have been up. So that's a $2,000 swing right there. Would have been profitable. And then again, the 9 to 10, a bigger loss, like huge, of just doing that session. You took harder losses on that one. 2650 and plus 1880. That's huge right there. What, about 4,400 plus 4,400 swing by not having that. And so looking at those combined totals, for it, so minus 655 if you had the hard stop. Actually, that should be right on that one. Let's see, 305. That's 12. That's gonna be 12 something. $305 plus 960. $1,265 and 1,700 minus 11. So that one was correct. Plus 600 and 625, 2650. That's correct. 3275 and then 1,300. Okay. So it's definitely interesting to see it lowers your win rate by actually having that 3x stop. You end up taking on more losses, even though you stay out of some like really big ones, but you're down on it. So that's the only one I'm doing it for. And then ES the past 2 weeks. So we had March 10th plus 300, and then March 3rd week minus 175. It was a 9 to 1, but you took this 86 take loss. So again, done trading, too big of a loss on that one. And then it still holds very strong the first 3 candles of market open, 24 to 4 plus 1,600 versus the half hour plus 1,400 and then minus 600. RTY March 10th week plus 210, 3 to 0. And the previous week, March 3rd, minus $55, 5 to 1. So plus 640 for the 17 weeks. But this number is staying strong, the 9 to 10 plus 1,300. And as you can see, minus 805 if you take those one before 9 while things are moving really fast. So multiply that by 3, so 3,900 for that trade session versus this one is actually, that's going to be closer to 4,500. But there is a good amount of, more weeks, 23 weeks. And then YM, still not that good. Plus 300 week of March 10th, 3 to 0, minus 500 the previous week, 9 to 3. And technically you're negative with all the commissions, but plus 340. And then no matter how you slice it, from 99.30 to 49, any of that, I mean, it just doesn't look good. You probably just break even with commissions. So, and then the triple G on all these, I mean, with like the volatility that's been going on, it's looked horrendous. Huge losses on them. Not even my trading style, how I would like to do it on it and stuff. This would fit more of what I would be looking for and stuff. So the number that I like the best is actually ES, just because of the efficiency of time. You're just looking for those first three candles, multiply that by 2, so plus 3,200 to be equivalent to what NQ is. And again, that one's not even taking on huge losses. A lot of them are only like 20 ticks. So, yeah, because if you just look 24, so if you get your 2,400 from all your winners, and so 800 is your losers. So your average loss is like $200. So it's really just like a 2-to-1, but you're still following the rules of moving that hard stop pretty far out of the way, unfortunately, giving it some room to breathe. So you're going to get the least amount of slippage with this probably, but you should still enter in with market orders. And there's just a great amount of movement during the open. So this is the one that, pretty much I would prefer. We have 23 weeks of it. It's an 80% win rate on there. So it has a good amount of time. It doesn't have a high number of trades, but a good amount of time to show that. So we'll see what, till we get a full year out of it and see if it's 3,200, if it's still kind of staying on the 80% win rate, 2-to-1, the R to R. So yeah, we'll probably just be moving forward. We'll just keep doing the market replay each month for NQ for the hard stop versus not having it, and business as usual on all of our other ones. So thanks for watching. Thanks for using the affiliate link. It's in the description, and just stay tuned. We'll keep track of everything.